What time is it in Johannesburg?
It's just gone past 11 o'clock, 11 a.m., so 6 past 11.
Oh, it's not too bad at all, George. Not too bad at all. Mate, so what do you got for us today?
Yeah, let me just share my screen quickly. So it's quite fascinating. Last week, I pointed out that this bear trend that we had across all the markets is likely to have continuation. I said that that was the first leg, and we're expecting a second leg. Now, right now I've got the Euro Stock 50 index open. So what happened throughout this past week? So this was the candle that was on when I spoke about continued bear price action, continuation of the crash. And this is what happened last week. Now, from a price action perspective, whenever you see a breakout, or in this case, it's a bear breakout, first thing we look for is a possible continuation, higher probability of possible continuation after a pullback. So that was a pullback. So first leg, pullback, second leg is down here. And that's a magnet that's pulling the market down. Now, this yellow line just indicates for me a cluster of confluence factors that are all pulling the market down. So there's the first leg, second leg. There's a trading range that was created here, including this whole week we're in a trading range. Now, whenever you see a trading range, just like Ainslie said, there is likely to be a breakout. The market's not going to continue all the way in that direction. But if it does break out to the downside, the bears want to get to a measured move. The measured move of that trading range takes us again into that particular cluster that I think is going to pull the market down. So yes, we've gone sideways, but the probabilities still favor the bears. That's where they want to go. So I'm expecting a breakout somewhere down here. How long it will take, I don't know what the catalyst, I don't know from a fundamental perspective, but I'm expecting a breakout of this trading range. And if that does okay, the measured move is down here. Now, probabilities, there's always this other side of the equation. Even if the bulls only have a 10% chance of breaking out, we're still in this bear trend here. We're in a bear trend. So even if the bulls break out above the trading range, look where the measured move will take us, right to the test of that trading range. So it doesn't, any bull breakout will not change the fact that we're in a bear market. And if we get up here, the bears who would have stepped out of here, stepped out of the market. Now, if you think about it, if the bulls start to break out, you're a bear, what do? You're not going to sell here. You're going to just stand back and wait to get to this level of test, measured move of the trading range, bear trend line, and sell again at a better price open to get down here. So still in a bear trend. Now, the good thing about this, I'm looking at the daily chart. These patterns, the markets are fractal. So whatever you see here will repeat itself. So what are you going to do on your charts is, especially now we're into the second half of the year, you got to mark, the low of the year, low of 2022. You got to mark whatever the high is. Midpoints of the year now begin to play a dominant part. You could flip through and do the same thing. German 30 or DAX 40, whatever, on the chart when your broker, really interesting. First leg, pull back, that's where the market wants to go. So now we are in a channel, spike and channel, pretty common whenever you have a trend. So even if you get a pullback, what I'm expecting to see if I get a test up here. Now, how does it affect my 5-minute chart trading? When I go into the market tomorrow, for example, although we're in a bear trend, because I'm in a lower time frame, I'm expecting the bulls to try and push the market off this low test candle, double bottom. So I can look for longs, but I'm looking for longs knowing that there's possible reversal coming in. And you can do that with all of the charts. Same thing here on the UK 100 trading range. There is the cluster of support that's going to pull the market down, measured move of that. Even if you get a bit more of the bulls coming in, it's just a trading range being created. S&P 500, a very distinct bear channel that we're in. There is where the bears could come in, test of that trend line, double top, but the market still wants to get down here. Will it get down here or 10 here? There's still more selling to come. So if we think that the crash is over, it is not. Clear, distinct channel, NASDAQ 100, Nikkei 225 is in a trading range. But if you ever look at it, if we come out of here again, there is a measured move to get to the bottom of the trading range. So this low test candle. If the bulls come into the market, they have to get above here. But if they get to the top here, bears come in. If we get to the bottom here, we'll get the bulls coming. Finally, Aussie 200. Same kind of thing. I mean, if you just look at the chart, what you see, big bear breakout. And bears, as far as bears are concerned, a bit of a pullback when I get to that level. So, Paul, this is what I'm seeing at a higher time frame, but the same patterns repeat themselves on the lower time frame.
Cheers, George. Thank you very much for that. Much appreciated. Certainly going to bring some clarity to some people on these markets for us. Rightio, so thank you very much for that, George. And next up, we've got Ainslie coming back to do oil. Interesting chart, Ainslie, for mine, that oil chart. Yeah.